Why focus on mid-caps, and what does Elizabeth bring to the table?
Yeah, so my team was doing some research around asset allocation frameworks, and we found some really unique statistics with mid-caps, particularly on the return persistency. We looked on a risk-adjusted basis, both for large caps and small caps, and we looked at assets, and we felt that there was a gap because there wasn't a lot of investment in mid-caps. So how do we get this out to our investors and to our clients in a very digestible and fun way? We didn't want to go the sort of old route with a guy riding a bicycle up a hill with a voiceover talking about challenges. We wanted something that would really take notice. So a dry topic like investing, we felt there was no better way to partner with someone like Elizabeth Banks, a writer, director, and a business owner to get that out to our clients, and so they could share in the insights in a very fun, digestible, and really innovative way.
So Elizabeth, let's turn to you. Explain what your experience with ETFs, if any, prior to State Street entailed. Do you own any ETFs now?
I do now, but it's only because of my work with State Street Global Advisors. And frankly, them bringing me into the fold when it came to midcaps, which, as Matt is saying, hi Matt,
Hi, Elizabeth.
don't get as much love as the big boys in the small caps, and also that being introduced through State Street to midcap companies like Dunkin', the everyday companies that sort of we use in our everyday lives as Americans, and that kind of run our country. And I was not aware really that they grouped together like this and invested in as a group.
Right, you're not the only one. Lots of people aren't aware of midcaps as a group, and especially their performance. Eric likes to call them that, the Jan Brady of the ETF world, the middle child in the Brady bunch. Since launching in 1995, we checked it, MDY is actually beating SPY and the Russell 2000 by a huge amount. Why don't they get any love with that performance?
There's a structural bias to it. If you think about the two main sort of sets of investors, you have fundamental investors and then you have quantitative academics. Fundamental investors are definitely overlooking them. There's twice as many analysts covering large cap stocks. There's mid caps. And then we did a simple search on SSRN.com, a nice research site, and there was nearly 5 times as many small cap research papers than there were mid caps. So both the fundamental investors and the academic quants overlook and under-research this segment, and that is really a risk to portfolios.
And Elizabeth, you mentioned Dunkin' Donuts. We also saw that you interviewed CEOs of other mid-caps like the New York Times as well. What did you learn about these kinds of companies and what they represent about mid-caps and how they can offer a lot of value to investors?
Well, what's great about those mid-sized companies is that they're large enough that they have, they have a great workforce, they have a great business plan, they're in the marketplace, they have distribution, they're kind of ready to go. They also have a lot of upside, which is amazing. So they have room to grow in the market, which is great. And I found through speaking with their CEOs, it was really interesting just to hear about that size company can really benefit from leaders and leadership that create a corporate culture that is all about like service and customers. And there's just something, they're small enough that they feel mom and pop in a way, like you feel like their values can be represented through the company. They really love getting to know their company, know their customers, their clients, whatever it may be, and they have a real sort of love for what they're doing. I mean, Dunkin' Donuts, it was an incredible experience getting to know them. They're not a donut company; they're a drinks company, and it was so interesting to hear they're all about the coffee. I also sat with Sam Adams, the brewery, and to hear about breaking into the beer, the world of beer, which is sort of run by Budweiser and these big, huge companies. These guys are like a fan of microbrews, which is now like a rage across the country, and they were sort of first in that market. So they have a lot of passion about what they're doing, and I felt like it was really fun to feel that passion in the business.
Now, of course, that was the previous campaign. Your campaign this year features some ordinary people, but you also talked to spider experts like Sue Thompson and Matt here. Matt, you tried to show off a little bit. You threw in some financial terms like risk-adjusted returns and the Sharpe ratio. I mean, there was some ad-libbing here in the campaign, and Elizabeth had to take out the air horn.
Yeah, there's actually a lot of material that was on the cutting room floor when I started talking about Sortino ratios, and that was when the air horn was really going full blast, and we had to sort of dial it back. And I think it made for better content when we took that out. Yeah,
the Sortino ratio is not going to cut mustard with Elizabeth. She's not going to tolerate that.
No, part of my job working with State Street, of course, is to make all this financial jargon really relatable to everyday investors like myself. I'm just an everyday investor. And of course, we want to hear what experts like Matt have to say, but we also just want straight talk, easily understood advice, like, hey, you should check out Midcap.
Right. Elizabeth, final question to you. Did you find any parallels between either the movie business and the investing business?
You know what? Both of them have a lot of jargon, and a lot of it you have to cut through the BS.